Robinhood was a high growth stock in 2024, and investors have expected a lot from this company over the past couple of years as the stock has risen. But in Q1, we could see things slow down pretty significantly. We learned that because they release monthly metrics, at least the first 2 months of each quarter. So we now have data from January and February. We won't get the March data until earnings are actually released. But I want to go through what we know so far because it could help frame what to expect from Robinhood in 2025. I also want to put this into a little bit of context. Month-to-month numbers are not necessarily the best indicator of the health of a company like Robinhood. So I own shares of Robinhood, a little bit worried about the price, but I'm not going to sell shares because they have 1 month that's a little bit weaker than the month earlier. So hopefully this is helpful in framing how Robinhood is doing so far this year and whether or not we should lower our expectations a little bit for the first quarter. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go to the monthly metrics dashboard. There's some other numbers that I'll show in just a second, but this gives a good idea of and context as to what is going on with Robinhood over the past year or so. So these numbers go back to January 2024. First thing is going to be funded customers. So just the number of customers who have an account. This is not growing all that quickly year over year, up 2 million, but you can see that that's less than 10%. So this is one of the challenges with Robinhood today is there's a lot of growth in assets under management. So they're winning wallet share, but it's very difficult to attract new customers. So just kind of keep that in mind when you're thinking about Robinhood's growth. They do want to attract those younger customers in particular because they're going to try to ride those tailwinds as those people start to invest, start to open up retirement accounts, spend more money on credit cards like Robinhood Gold, things like that. But that number is moving higher, but not at a very rapid rate, at least over the past couple of months. Second thing is assets under custody. This is going to give you at least an indication of how much people have in their Robinhood accounts. And then that's going to be a pretty good proxy for kind of how much spending that they're going to do on the platform or how much money Robinhood is going to be able to make. If you only have $100 billion in assets under custody, your opportunity to make money is going to be lower than if you have 187. The reason that this is down over the past month is because the market is down. So when stocks are down or bonds are down or crypto is down, you're going to see this fall as well. Net deposits, this is going to be how much is coming into the Robinhood platform. Net deposits was still over $4.8 billion. You go back a couple of years and this would have been a phenomenal number. Not all that impressive when you look at the past year. The annualized growth rate is also falling a little bit. It was 44% in January 2024. Been a little bit volatile, but it was just 28% year over year in the most recent month. So again, this is why I'm saying that growth may not be what you think. Cash sweep is just going to be an indication of how much cash is in the accounts. And these are gold cash sweeps. So they're going to give higher interest rates on that, but that is going to be something that they're going to be able to make money on that arbitrage. So the other thing that we want to look at, this is going to be a little bit better indicator of actual revenue because Robinhood typically makes money on payment for order flow. So you want orders going through the system, not just assets on the platform. I am a Robinhood customer. I have Robinhood Gold, so I pay that monthly subscription. We don't get those monthly Robinhood Gold numbers, so that's something to keep in mind. We do want to see that growing. That's been growing very nicely. So that would be an indicator of health. But I'm also not somebody that trades very often. So Robinhood is not going to make very much on payment for order flow from somebody like me. They're going to make more money on somebody who, even if they just have a few $1,000s in their account, trades on a regular basis. So this is going to be an indication of that. Equity notional volumes, $142.9 billion. That was down 1% month over month, but up 77% year over year. So again, you compare this to the third quarter, which is going to be the fourth quarter. These are going to be these 3 months right here, 126, 147, 150. Things are flat-ish in the first 2 months of the year. Options contracts traded, again, kind of flat. Crypto volumes are going to likely be down, at least from the numbers that we saw in November and December. This full fourth quarter numbers going to be a little bit blended. Things might be up a little bit sequentially. And then the margin book is actually growing nicely. So this means that more traders are investing on margin. Good for Robinhood. I'm not saying that anybody should be investing on margin, but this does make Robinhood's numbers look better. Another indicator of trading activity is going to be DARTs. This is the daily average revenue trades. We can go back here and look at this definition, which is at the bottom. We define DARTs as any asset class divided by the total number of revenue generating trades for such asset class executed during a given period divided by the number of trading days for that period. In other words, they're looking at how many trades are happening on the platform. So you can see that equity trades 1.7 million on an average day. That was up. The year over year is 26% increase. So 2.4 million in the most recent month. And then increase in options is about 50%, in crypto obviously up. That really ticked higher in the November month, up 133% year over year. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The one thing that we don't see on a monthly basis, and I understand why they don't show this, but is the gold subscribers. Because one of the things I think we need to understand with Robinhood is the business model is just completely different than most of the brokerage business models. They're going to try to make money on these gold subscriptions, and that they now have 2.64 million subscribers, paying about $50 per year for this. And that was up 1.2 million from a year ago. So basically doubling the number of subscribers. And that went from 6.1% penetration to 10.5%. So really high increase in that penetration. And that's what's going to pull that wallet share. Because there's a bunch of bonuses you get for being a gold subscriber. So that's going to give you an incentive to do things like adopt a credit card or put money into a retirement account on Robinhood instead of on another platform. So this is going to be maybe a better indicator of their earnings potential than just the trading numbers that I showed earlier. But this is going to be the other thing to watch in earnings is, do the number of gold subscribers increase? This is going to be very high margins. It's also going to be an indicator of the long-term health. Let's just show some of those numbers. What we want to see is these long-term trends moving in the right direction. Pulled a few pieces of information here because I think this is helpful in understanding Robinhood business and the profitability going forward. The green column is the company's total revenues. Total revenues, you can see ticking higher. Like I said, revenue may not grow all that much sequentially. So from the fourth quarter to the first quarter of 2025. But that gross margin number is really high. What I have been very impressed with Robinhood over the past year or so is the fact that look at those operating expenses, about $1.6 billion. That has been about flat over the past year. So they are doing more with less. More of their money is flowing to the bottom line as a result. And if they're winning market share, I think this company is fundamentally heading in the right direction. Now, the price is a little bit expensive as I'm recording. Price to earnings multiple on a forward basis is about 32. With a $43 billion market cap, you're looking at a company with a price to sales multiple of about 14 or 15. That's pretty expensive. And the company's current growth rate probably just doesn't justify that. So that's where I think there is risk in the stock just from that price coming back down to a more reasonable level. But that's when I'd be more interested in buying as well. You start getting to that $35, $30, even $25 per share price point. Now you're looking at a growth stock that's priced a little bit more appropriately. I'm absolutely not selling my shares today, but given the fact that Q1 is likely to be a little bit lower growth than maybe investors expect, don't be surprised if there is some sort of pullback based on the initial data points that we've seen. Hopefully that's helpful in understanding what's going on with Robinhood today. Leave your comments about Robinhood stock, what you think about the stock going forward in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.